Okay, here we are, episode 1 of Gridloc'd. Today I have a special guest with me today, Qiana Williams, my sister, a lender in the Los Angeles area, also covering many different areas, but I'll let her do most of the talking for you. Qiana, welcome to the show.
Hi, thank you for having me.
Hi, so let's get right into it. Tell people a little about yourself and how you got started and everything.
All right, perfect. As Derek said, I am his sister and I am a licensed mortgage lender. I am with American Pacific Mortgage with Mortgage Tree Lending Financial Services here in Southern California. Our company is nationwide. However, I'm personally licensed for California and Texas. I've been a lender for over 10 years, probably about 11, 12 years now. So I have a vast knowledge of what's going on in the market as far as loan programs and things like that go, monies that are available to people to assist with getting into home ownership without having to worry about having a savings account that's supposed to go towards that. Um, I'm also a Navy veteran, so my discipline, commitment, and attention to detail has definitely served me very well moving over to the real estate industry. So I'm really excited to be here. I really am honored, Derek. I'm your first interview. Like it should be. I was the first. I'm the oldest, so I was the first of
Right.
everything. Okay, so so I'm ready to answer any questions I can. Provide some. I love providing information that'll get the mind thinking. It doesn't necessarily require an answer or response, but it just opens your mind to areas that you're just not naturally thinking of, or that the people you're talking to aren't saying or talking about. So let's do it.
All right, so let's just jump right into it. Number one question we always get. Number one is right now the right time to buy. What say you?
Yes. And I'm not
Short and
just
sweet.
saying it because I want to do your loan, guys. Okay? No, for real. Honestly, it's a that question. I'm not gonna lie, it gets on my nerves because it's
Right.
like, well, what are you trying to do? Like, what do you mean? Is it the right time to buy? Because first of all, a majority of people who are buying or who are asking this question, it's going to be their family home. It's going to be their primary residence. We're already looking at a 30-year loan. So at what point in 30 years do you think it is the right time to buy? So
Right.
to me, that means yes, it's the right time to buy because you got 30 years to play with this mortgage, to go up and down with the market. You'll be in a house. Maybe you got your house a few years ago when the interest rates were lower, and now you're looking like, oh shoot, the interest rates are high, but you own your house. But now guess what? The interest rates are coming back down. And guess what also happened during those few years? The value of your property shot up. It went up. So people are sacrificing the equity, the value in equity growth that they could be realizing by trying to wait for that perfect interest rate. And the interest rate is only a difference of a couple $100 from what we're talking about. Because if you guys really want to be concerned about a cost on there, think about the mortgage insurance. You know what
Right.
I'm saying? Because that's where you really start to saving. When you have 20% equity in your property, that's when you can really start saving. That's when you can really start leveraging that equity to use that money for other income producing assets. So answer, yes. It's always a good time to buy.
Short and sweet. So if you can actually afford to buy a property, get into a property, correct?
Correct.
Okay. So what types of loans programs do you have? What do you offer for people who may not be able to afford in their eyes the property?
Okay, so when it comes to afford usually is usually tied to what they want
Right.
versus what they actually qualify for.
Right.
So I like to go on and dive into the pre-qualification and really look at the income and the credit so that we can get some real numbers and some real information, some real data so that if that's not the price point you want to be at, let's just say you qualify for 400,000. Well, I'm here in LA, so as we know, you're not getting much for 400,000 without there
But a
being a
box.
commute from work. What you burning up over there, buddy?
Not just a box. That's all you.
Smoke over here.
Yeah, that's all you're getting in LA is a box.
Yeah, all you're getting in LA is a box. Hopefully,
Yeah.
hopefully, maybe So you you don't you so you may only qualify for the 400,000. So you're like, okay, Qiana, that's not enough. I don't want to be driving 2 hours to work and back home to just to be able to afford where I live, but I'm supposed to be getting a raise next year. Or I'm looking at getting into a I'm looking at getting a promotion or getting a new job where I'll have more income. Or I plan on getting married, or hopefully I'll have a girlfriend or somebody by then or boyfriend so they can
Right.
help.
Right.
So the circumstances may change to where you're like, okay, let me wait so I can bring my income up.
Mm-hmm.
And that's what some people do, or some people go ahead and get the house, sit there for a year, get that equity, and then come on back into town to leverage the what they earn from that house to get into something that's a little bit more within their buying criteria of what they actually want.
Right. Okay. So, interest rates. I know we're coming up in the last month of Q1 of 2024 right now, but right now, what are we looking like for our interest rates?
Interest rates right now are still hovering around the 7%. It is projected that I would say it's not my projection; it's the industry's projection. So I'm literally repeating my research that I found, and because I see that it hasn't been wrong. It hasn't been wrong yet. So and it's looking like we'll be probably averaging out and sitting around 5.5 by the top of the summer.
Okay. Okay.
So that's why now actually is specifically a good time to start looking for a home, because if you can beat that rush right before the summer, because as soon as those kids get out of school,
Man.
everybody's running around trying to find a house, trying to figure out what they're about to do, what we're going to do with these kids. Now we see we don't have enough room. They keep getting taller and longer, so like we need more space,
Right.
and we prefer we own it. You know
Right.
what I'm saying? So I would say that's kind of, I believe they're going to come down to about 5.5%, like kind of where we were the beginning of last year and the year before that. And the values of the homes, they're not going down to something ridiculous like 2008. You guys, 2008 is never happening again. Okay,
Never.
it's not.
Never gonna come back.
Just like it's just not happening again. It's not the same climate, not the same things going on. The little hustles and the little scams and stuff they were getting away with back then.
Right.
It's heavily regulated now, like it was not at all before.
Right.
So that's never, ever, ever happening again.
Right. Yeah, there's a lot of different ways to get around what we need to do. But a real question that everyone asks is, what's the loan process? What's the application look like? How do we go through it? I get that question a lot. And for me, professional courtesy, I like to leave that for the lenders to answer. It's not like I don't know the answer to it, but I definitely want to leave the lenders to explain the process. So kind of dive into what the process is of the loan application.
Yeah, I definitely wouldn't recommend a real estate agent to get into that conversation too tough, because what happens is it opens up everything else. Because the mortgage application, once it's all said and done, because everything's done electronically, so it essentially builds itself.
Right.
But I just tell people, short and sweet, we're asking for everything except the color of your underwear, okay?
Hey, hey. I need that too.
Except that. Other than that, we'll take that information and we'll get your pre-qualification together. The things that we want to know, um, obviously, we want to know who you are. Like, what's your name? When's your birthday? When can we come hang out and come to the birthday dinner? We
Right.
want to know your phone number. We want to know about your income and employment history, income history as well, not just your current income, but the income history from your previous employers, current employers, multiple employers, your self-employed self, stuff you're doing on the side, the things that you're reporting on your tax returns from side gigs or things like that that aren't necessarily your main income. I My goal is to find all your money, and so that we can maximize your maximum purchase price that you will qualify for. It doesn't do you any justice to keep anything from your loan officer. Your loan officer is on your side. If you don't feel comfortable telling your loan officer the truth, you need to get another loan officer, okay?
True that.
Because that's just not a good feeling, because this is the biggest purchase and commitment you're going to make in your life, and the first one for a lot of people. So you definitely want to make sure that you're not holding things back. You're able to be fully transparent with your income, with your employment history. Um, when it comes to, I know people ask a lot too about criminal history, criminal history, and things like that too. Um, it doesn't really play a factor. Just kind of just I think it would just kind of depend. But I haven't ran into it with people who have like felonies or anything like that. They've been able to come on and still buy property, because they're working, they're doing the things that they're supposed to be doing. So there's no reason, we're not looking at your criminal history anyway. Like
Right.
there's just no reason for us to be all over there. The only people who look at your criminal history is for rentals.
Right.
Okay. And even in our similarly benefited lease to own type program that we have, we don't look at your criminal history. So I just wanted to put that out there, because I know there's a lot of men and women out there that are extremely talented and smart, and have maybe had some of these hiccups or barriers in the past, but it's not anything that defines them and who they are and what their goals are now and moving forward. So I definitely welcome, what do we call it? Justice impacted, because who likes to say felon or anything like that? Like that's
Right.
just no fun. It sounds negative.
Right.
We look at your credit report. Of course, we pull all three credit bureaus, um, and we take from that. You have your highest score, you have your lowest score, and you have a score that sits right in the middle. That one that sits right in the middle, that's the one we use for your qualification. That middle score can be as low as 580, all the way up to the top. What is it, 850 now? I think they changed the scoring model to.
Hmm.
Um, and and with that too, I know a lot of you guys are, monitoring your credit with like Credit Karma, Credit Sesame, and all those cool people. Um, and you'll notice that when I pull your credit, the score will be different. And that's only because it's just two different scoring models. The type of report we pull is called a consumer credit report.
Hmm.
The scores that Credit Karma and them are pulling, those are Vantage scores. So I still like those credit monitoring sites for you guys to use to help keep you in the loop with your credit, so you stay on top of it, you know what's going on. And sometimes it's not too far off. So if you've been working on your credit and you see your score going up on Credit Karma, it's definitely going up on the consumer report, but it's just not going to be the same number.
Right. Right.
You know, we look at housing history. We want to know if you've been in your current residence for 2 years or more. Otherwise, we'll need a 2-year residential history, and yes, that is for renters as well. You just need a 2-year history, because that obviously will pop up and show up on your credit reports as well. So you want to make sure all those things are lined up. We want to know how much rent you're paying, because we'll want to make sure that when you get your new mortgage payment, that it's not going to be a payment shock. That's another feature that has come out of the 2008 crisis. Payment shock, payment shock, payment shock. We're
Hmm.
making sure we're not shocking you guys, and you're not shocking us by not paying. Okay. so,
Right.
so so we look at those things. We look at your any additional assets you have, like good ones to leverage are life insurance policies. If you have life insurance policies that have face value, different accounts like annuities, 401ks, things with value, broker accounts, stocks with value. We look at those, and you can use those to help you qualify because they can be used as compensating factors. Let's say you are one of those people who has the 580 credit score, but you earn a good income and you have a good rental history, but your credit sucks for whatever reason.
Right.
But you have these other assets over here you can use as a compensating factor so that when the underwriter looks at it, it's like, okay, well, they just need to bring their score up. But overall, they look responsible. They have money over here. They clearly are able to show the ability to repay. And that's what all these things are for that we're asking for and looking at. To see your ability to repay, to see your comfortability in being able to pay so that you can benefit from home ownership.
Right. Right. There's a lot of good information, but we're gonna pay a couple bills real quick. What you guys see on the screen right here is our Instagram handles. Mine, I am Derek Dante, and at funding underscore angel. So you guys want to follow some more tips and information, that's where we'll be. Okay, so next question, kind of you answered a lot of it, but what documents do I need to provide when I'm going through the loan process?
All right, so let's start with the pre-approval process because we kind of try to break it down because when I send my list out, it can seem a little intimidating. But again, this is the biggest purchase of your life. So you want to make sure all your ducks are in a row as do we. Um, the first thing I ask for in order to get your pre-approval within 48 to 72 hours, I ask for your ID, your last 30 to 60 days pay stubs, depending on which program we're going after. Um, your last 2 to 3 months bank statements. There's a couple authorizations um, that are given to you to sign that pretty much just gives your loan officer permission to pull your credit and to discuss your credit and income with you. We need those on file by law because when we go to request things like your verification of employment, verification of mortgages, if you already own property or anything like that, we have to send a copy of those authorizations with our requests to your employer, to the mortgagee or whatever. So as far and then for along with that, we also ask for your W-2s. So
Mm-hmm.
there was a point where we were taking the full 1040, the full tax return, um, with all the original W-2s and 1099s, but just depending on how you earn your income. If if you are only strictly a W-2 employee, meaning you only work for an employer and you get a paycheck and you get a W-2 every year and you don't get income from anywhere else, um, then I only need your last 2 years W-2s. I do not need the full tax return. We don't have to go chasing down your tax person. Just go get your W-2s and we call it a day right there. The only time we need the full tax returns, and this is an update, okay, this is new because tax returns were required before, but the only time we need your tax returns is when you're claiming self-employed income that's not being tracked by or cash income, like for people who
Mm.
are in the tip game, entertainers, my favorite, my strippers, my sisters,
There you
you
go.
know in order to show that income, you have to put it in your schedule C. You have to itemize it in your
Mhm.
tax return. So that's how we're able to see how much you make. So if any of you have ever that are self-employed have ever tried to apply for a mortgage loan and didn't qualify because the income on your tax returns didn't match what your mouth was saying or what your bank account was saying,
Right.
is because that's the official document you turned into the IRS.
Right.
So we're not about to lie with you and, and go and say, well, we know you make this, but you told the IRS this. No, we all need to be in alignment on the correct
Same
and
page.
truthful income.
Right.
for everyone's protection. So when you know there, like, there's nothing wrong with claiming your losses and things like that, and maybe your income didn't come out to as much as you would have hoped for that year. Fine, do what you have to do. But when you know you're ready to get into home ownership, it's definitely going to get time to start telling the truth. I'm going to call it like what it is. It's time to start telling the truth because that's what it is. You clearly left off some stuff because you didn't feel like talking to Uncle Sam this year.
Right. So go along with that, fees associated with your loan process. What's the normal fees to expect? I mean, I know we have some that kind of pop up from time to time, but what are like the normal fees that just go along with the application?
uh, what is it? How do you say it? Traditional and customary fees for for the process of buying a house. The cost of a loan, okay, is I tell people it's 6% of the purchase price. That's just a
Hmm.
good rough estimate to kind of give you an idea. 6% of whatever your purchase price is that you are approved for, and whatever your offer is accepted at. 3% of that goes to your closing costs, and those are the additional costs for all the people and the entities that all come together to make a home transaction possible.
Right.
Okay, so we're talking about our title companies, our escrow companies, appraisal companies, the credit companies, home inspectors, uh, our favorite people, the property tax folks, homeowners insurance folks, mortgage insurance folks. All those fees and those numbers are within your loan. These are all the things that go towards your house. So it's not money that's going in our pocket and me and Derek are high fiving each other and splitting it and going to party. No, it's literally the cost of servicing your loan and making sure everything is legal, sound, and in no way can turn around and bite you in the butt. Because the biggest thing that I've been seeing too is that homeowners or homeowners have been having problems with their titles.
Hmm.
They've been finding, mistakes or errors or things like that in the title. And title is so important because any mistakes or break in the chain of title, you can't do nothing with that house. You can't sell it. You cannot refinance it. You can't do anything with it but just sit there
Yep.
and still
Cloud on the
keep
title.
making your mortgage payment.
Hmm.
You can't do anything. So that's why all these pieces are important in the beginning. So I know you're like, oh my gosh, I don't want to pay all these things. Trust me, it's to your benefit and it's only one time you're paying it. Okay. And then the other 3% or other 3.5% is your down payment. So FHA loans require 3.5% down payment. Again, the down payment that you put down, it goes towards the purchase of your property. So again, that's not money that's just going to the seller in addition to the purchase price. It's deducted from the purchase price. It's deducted from the total cost of your loan.
Right.
And the only things that you guys are paying for up front that are not financed into your loan, because all this other stuff is mostly financed into your loan, except for some prepaid items like paying for the appraisal. Once your offer gets accepted, you are responsible for paying for your appraisal. Paying your credit report fee, you're responsible for that. Paying and scheduling a home inspection, that is your right and your option. So that is the one service that you have the say so on who does your home inspection. When it comes to the appraisal, you do not have the say so. Again, that was also changed and derived from 2008.
Right.
All the mess they did in 2008, inflating appraisals and all that, is no more. So I can't even talk to the appraiser, okay? They don't even want me talking to them. My corporate office has to order the appraisal electronically, and I can't ever talk to their appraiser at no point in time in there. So everybody is protected and forced to stay honest.
Right. Right.
But that's pretty much in a nutshell what the fees are, and they're itemized very very well within your loan documents. They're presented a few times throughout the loan process. The first set will come out as estimates as far as what's projected to be your fees. Once you actually get a property, an offer accepted, and you have a property actually put in there where we can do the exact numbers, it gets tightened up, and you'll know exactly what the cost of your loan is and what your money is going to.
Right, right. Okay. Well, yeah, you kind of mentioned down payment. Down payment. A lot of people are asking what's normal for down payment, but also down payment assistance and other programs that you have. So, kind of speak to some of the programs you guys have, down payment assistance, and about how much should one require for down payment.
All right. So if you're taking advantage of the down payment assistance programs, I always like to present that as an option because I'm a firm believer in keeping your liquid and leverage other people's money, which is the lenders or the down payment assistance agency that will give grant you the money or loan you the money. There's two types of ways to get down payment assistance. One way is to just get a grant, meaning you don't have to repay. The other way they issue down payment assistance is through a silent second mortgage, and it's silent meaning it's not going to be calling you to make a payment on it through the life of the loan or until you through the life of the term, unless you refinance or sell the property. Then that's when you repay the silent second.
Hmm.
So we have a lot of programs. I actually have specialized in down payment assistance programs because it was important to me to connect people, home buyers, with the pile of money that's just sitting there. Like we
Just
got a
sitting.
pile of money sitting. What are we doing?
I need
Why
to go
are we
get
going
it.
to why are we so eager to use our money
Right.
if they got some money for us?
I need that.
So it's like, hello, like I don't know. I'm like, I don't know where all the gold diggers went, but I'm alive and well. So I want so I want you guys to be able to benefit from that because my thing is I don't know when that pile of money gonna run out. All I know is that the eggs are high
Right.
and there's still down payment assistance money available. Even during COVID, there was still down payment assistance money available. I wouldn't be surprised if some of the PPP loans came from there.
Right.
You know what I'm saying? Like they're like, yeah, we got that back. Boom, the pile is still here. Pile is still growing, and people are for whatever reason. I'm even hearing people with negative things to say about the down payment assistance
Right.
program. Like, well, yeah, of course. Like with anything, anytime anybody gives you anything, of course there's a benefit for them too.
Right.
Of course,
Right.
there's a benefit for you. So why they can't have one too? So their benefit is they give you a slightly higher interest rate, so that they can. That's their little fee. They recoup just a little bit. They recoup just a little bit.
Right. And it's funny because a lot of realtors, when I turn in offers with DPA, down payment assistance, sometimes they look at it a little funny. And, it's not our job to look at, the offer and be like, oh, that's not going to work. You present it to your seller and we'll go from there. But it's definitely true. A lot of people will look their noses up at down payment assistance like we shouldn't be taking advantage of that, which is crazy to me. So the new FICO scoring. How does that differ from like maybe the old model? I mean, I know you touched on that a little bit, the difference of like Vantage Score and FICO, but kind of the new model that they're presenting now, I believe it's FICO 9. Does that differ from maybe the FICO 8 that you guys were using before?
No, it's not. It doesn't differ only because we're looking at we're just looking at the minimum credit score for you to qualify. You know what I'm saying?
Hmm.
It's only you just need to be in a certain bracket. Now, if the scoring model keeps increasing and the number keeps getting bigger, great. For the people who get that high. But we're only our minimum hasn't changed.
Okay.
It stayed for FHA. It stayed at 580 for conventional. Stays at 620 for VA loans. It stayed at 620. We so far are still just looking at the minimums, and it looks like we are comfortable there and have no need to change it.
Right. Okay. Yeah, I know a lot of people had said that as well too. Like, oh, things are going to change when the FICO scoring change. We'll
No,
see. Yeah. how they
Yeah,
can.
no. Tell people stop making up stuff.
Right. A lot of what they say is just people who are just sitting in a room together and they don't have the actual information. They are just saying it.
A lot, and that's how a lot of conversations and fears and rumors get started.
Right. Right. All right. So we're going to pay a couple bills again. You guys
That's
liking
the
this
plug.
content?
Plug us in.
Right. Like, comment, and subscribe if you guys are liking this information that we are putting out to you right now. So you kind of touched on it beforehand. A lot of people, especially here in the Bay Area, are not as much as W-2 workers anymore. We do a lot of gig work up here. So we touched on the VOE, the verification of of employment. So when you don't have 24 months of the employment, um, how do you guys go about verifying both? Just the gig work along with the W-2 work.
So they get gig workers like Uber drivers, Lyft drivers, all those good folks. They usually get a 1099. So
Mm-hmm.
we'll take the last 2 years 1099. So no matter how many you have, we'll add them all. We'll add them all up. And again, if you're cash, you just have to claim it on on your tax returns. And then on the side of that, we would ask for a year to date profit and loss statement, and then we'll calculate the average to get your qualifying income from that. But we have but we also have a new program that's making it that's specifically geared towards gig workers, actors, actresses, people in those kind of fields where, like even teachers, where it's seasonal or it's
Up and
spotty.
down.
It's
Right.
kind of, you know what I'm saying? It's not
Yeah.
like a 9 to 5, 40 hours a week. It's not like that. It's per booking or whatever, per contract. But we have a new program now to where we'll only look at your last year. So we're in 2024. So if you're self-employed, I'd ask you for your 2023 tax return and your year-to-date profit and loss. Meaning, which is why, like I said again, it's a great time to buy, especially if you're self-employed, for the less paperwork. Okay,
Right.
because the new program is much less paperwork. But we need 1 year 2023 tax returns with the Schedule C, and then a year-to-date profit and loss, meaning starting January 1st, 2024 to March 19th, 2024, how much have you made?
Right.
And that will be averaged together to see what you qualify for. You can even pull Cash App. Your Cash App,
Mm.
put that in the profit and loss statement. All you got to do is go get the template off of Google and match it up with your bank statements or your wherever you're getting your cash deposits or whatever. Match it up to that, because we're definitely gonna look. Don't try to go lie on the profit and loss and then you got negative $200 on your bank statements. That's not gonna work. Do Tell the truth again. Put what you're actually earning on there, because a lot of people, that money helps. It counts. It gets them right to where they want to be, because they're like, okay, cool. Now I can finally use this income when I wasn't able to before, because it's not steady, or it's not traditional. I'm not gonna say steady. It's not traditional.
Yeah.
Yeah, I was yeah. So that's how we were able to that's how we deal with that. We definitely welcome self-employed gig workers. It's definitely been made easier for them to be included, to be able to benefit just like a W-2 person.
Right. Okay. Yeah. I mean, a lot of this information, it gets lost in translation a lot of times. People make up things. They don't know where to even start. And a lot of times they're even afraid to contact a lender to even get the information. So, it's one of those things where I try to tell people, go talk to a lender, 10 lenders, 5 lenders, whoever, you know, just so they can get the information and try to see where a lot of things will match up. Because everyone's information is not going to be spot on 100% exactly the same, but it's the fact that they can get some of the information and kind of see where it fits for them. So, the big question, I get this a lot as well too. People are afraid of ARMs, adjustable rates. So, what are the difference between a fixed and the adjustable mortgage rate?
All right, so let's start with adjustable rate. So, like it says in the name, it adjusts every 3 years, 5 years, 7 years, whatever you decide. There's a cap on these arms. It can't adjust to something so crazy that you weren't expecting it. Okay, it's usually like 1 to 2% every so 3 years, every so 5 years or seven, whatever it is that is chosen. When you're getting an arm can be a strategic tool to use in home buying to make something more affordable temporarily. Because, like I mentioned before, you may have more income potential coming in the next 1 to 3 years. Things might change where you merge households or something, and having a lower payment for the first 3 years might be important to you than having a fixed higher payment for the next 30 years or until you refinance. So
Hmm.
it just kind of depends on what you're trying to do, and if a lower rate right now temporarily is more beneficial to your situation, or if going ahead on and locking in a fixed rate so you don't have to worry about things moving around just in case things change or are different later. It's definitely a preference thing, but you definitely want to make sure the lender you're working with thoroughly explains the differences to you, and to how it pertains to your situation. I'm just talking about it in general, just as far as like what it means and what it looks like. But you definitely want to make sure that an arm product is right for you, or make sure you have a loan officer that is because I'm the type of loan officer. Even after you close, I still monitor what's going on with the interest rates and what's going on with your interest rate, and look for any opportunities for you to be able to save, or if a 3 year mark or something is coming up on your arm and it's about to adjust. I'll say, hey, what do you want to do? Do you want to refinance, or do you want to go ahead and roll with the adjustment? Do you want to see what the rates are looking like now for a fix? And then we just kind of go from there.
Okay. So you kind of touched on refinance. That's a big issue as well too. What kind of happens if I miss a payment or I need to modify my loan? What's the process of that?
Call your lender. Call whoever your mortgage servicer is. Look, you pull your mortgage statement out and you call that big old 800 number on there. And
Hmm.
so, and most of them now, especially since pandemic, most of them have right above that big 800 number. It says need help question mark.
Right.
So the banks, the mortgage servicers, they have even implemented programs to give homeowners a chance to work with you, because honestly, with the way they don't want your house, they don't really want to foreclose, they don't really want all that on their books. Because if you own the distressed house and then they take it from you, guess what? It's still distressed with
Right.
them.
Right.
Like, so now they're trying to find somebody to buy it and take the stress. Like, you know what I'm saying? So they really don't want to do that. Like, it doesn't. They make more money off of you making your mortgage payment and paying that interest. That's what's projected. That's what's keeping their doors open and eating.
Right. Okay. So typically, how long does it take to get approved for your loan, get funding, so you can move through the process of the home buying process with me on my side, the realtor?
All right, so pre-approvals I can have done within 72 hours, just kind of depending on the submission speed of the client. Um, Usually I can have them same day, but sometimes people with life and things like that, they have to go kind of go gather their things or go talk to their spouse or whatever. Um, as far as once the pre-approval process happens, you get your pre-approval letter, and you'll go take your pre-approval letter and be like, okay, Derek, I got my money. Let's go shopping. I know what my max purchase price is.
Hmm.
And then you go look for your house. And then once that time frame, I can't estimate on how long it's going to take you to find the house you like and to actually get your offer accepted. But once your offer is accepted, that's when our clock starts again, or starts really, because our clock didn't start the pre-approval process. Our clock starts after your offer gets accepted. You define how long your close of escrow is going to be.
Hmm.
So we typically do or see 30-day escrows. So from the day your offer is accepted, your agent will give me a copy of the accepted purchase agreement, the fully executed purchase agreement, meaning the seller has signed it, the uh, the agents have signed it, and the buyer has signed it. And we take a copy of that because that is our instructions, and that is shared also with escrow and title. That's everyone's instructions on how this transaction is supposed to go. Okay, everything is defined within your purchase agreement. Um, so we take as long as it states in the contract for close of escrow.
Okay. Okay. So, we hear things here and there about, well, if you pay an extra $10 on your mortgage, it can go from 30 years to 23 years or some factor, depending on how the size of your mortgage, obviously. So, do we have any prepayment penalties?
It depends on the program you have. You have a pre. Well, okay, so for traditional loans, uh, yes, I guess you can call it a prepayment penalty, but you have to make your first six payments before you can do any refinancing or sell your house or whatever. Um, Once you get past that, it doesn't really matter for that program I was telling you about. That's tailored for like gig workers and actors and things like that, where you only need to do like 1 year tax return and your 1099s and the year-to-date P&L. Um, they have a that program has what is it? It's a 3-year prepay at 2%.
Okay.
So if you refinance or sell the house within those 3 years, um, you'll pay 2% of that to the lender,
To the
back
lender.
to whoever's servicing your mortgage.
Okay. So, refinance is always a big, hot button. A lot of people may not understand it the best. We kind of touched on a little bit about like financial difficulties during the process. So, what other options outside of simply refinancing if I do run into financial issues throughout the loan?
So you want to look at things running into financial issues. That means your income is probably suffering, um, and or you also have uh, possibly some late payments, things like that. Um, with that, a lot of people what's been popular, a lot of people have been running to get more liquid back in their pocket and kind of try to figure things out is to get a HELOC, the home equity line of credit. A lot of homeowners are are seeing that as being something that they would like to kind of have just even as a nest egg, because they're not even taking the line of credit out and using up all the money right away. Like I think most of them are using it just maybe for some emergency stuff, but for the most part, I haven't seen people really exhausting the whole line.
Hmm.
And the good thing about a line of credit is that you're only making a payment on the balance. So if you have a $25,000 line of credit, but you only have used $10,000 of it, you're only paying on that 10,000. It's
Right.
not a loan; it's a line of credit. So it's still technically it's like you and the bank are sharing the money, and they're like, okay, you using some of it, okay, you're gonna pay for that piece, and
Right.
we're just gonna keep holding the rest for you over here.
Right.
You know what I'm saying? But they're holding it in your account. So that's what a lot of people are doing. Line of credit. If you've been making your payments, nothing, everything's fine. You just have a lot of equity, and you just want to pull some cash out to go do whatever. Um, a cash out refinance is all people are also looking into that have high equity. That requires a cash out requires a full doc application again. Just like when you bought your home, you're going to look at your income, your credit, you're going to look at all that stuff again to make sure you can afford the higher payment that's going to come from you adding your cash out balance to what your current mortgage balance is, and then making a payment on that new balance.
Okay. Sounds pretty reasonable. So,
Yeah, you want the money.
right, right. So, what about okay? So, let's say I go with the HELOC. Are there any restrictions whatsoever? Like, you can't use it here, you can't use it there. There's no real restrictions on the loan.
No, refi, cash out, and HELOCs. You can use that money for whatever you want, even with reverse mortgages. You can use that cash for whatever you want. The only ones that have those kind of restrictions are the ones that are tied to rehabs or construction.
Okay. Well, that makes sense. I mean, a lot of people may be afraid of that, because taking money out may increase their mortgage, may increase the time that they need to service the loan, things like that. So, and, that's definitely some information that lenders need to go over, I guess, more to keep people, grounded when they run into these types of issues. Um, Pretty much the last question I have, unsecured loans compared to a secured loan. Speak on that.
So unsecured versus secured. We don't work in the world of unsecured because it's all secured by property.
Okay.
So unsecured pertains more to like credit cards and things like that, where you don't have to put up any collateral or no property or a thing doesn't have to be attached to it in order for you to get it.
Right.
You know what I'm saying? So these are secured by your property.
So everything is a secured loan.
Yeah, every mortgage loan is a secured loan. Otherwise, it's not a mortgage loan. It's a loan.
Right.
It's a loan. So you go get your unsecured loan from your credit union and go do whatever you're gonna go do. But you're buying a house, your loan is definitely gonna be secured by your house. That's it. So when you stop paying, it's secured. You stop paying, they're gonna take the house. It's
Right.
secured.
Right. We gotta make sure people understand, like, you have an asset, it's secured. People aren't just out here not worried about what's really going on with their loan and things like that. What I like doing with some of the guests is I want to touch on like their mindset in just business in general. I want to make sure a lot of people know kind of where you're coming from and what you do to prepare yourself with each client.
Well, I have I just talk to them. I really like to know what they're up to and what their plans are. Because there's again, like I keep going back to COVID because COVID has taught us a lot. Okay, it has taught us a lot, and I think people are wanting to be more prepared, just in general, just
Mm-hmm.
for whatever or any kind of circumstances. Because since pandemic, the rate at how things have been changing and adjusting, even to where it affects our income and the things we're purchasing, it's huge, and people are fearful and people are concerned. And when we're listening to the news and things like that, news only gets high ratings for telling bad news or things
Right.
that make you worried and are fearful. They're not going to tell you positive, uplifting things so that everybody can go out and make some money. That's not how they make money.
Right.
So I like to tell people to please be careful with the information they take in and how they digest it. Don't let everything that's coming out in the news or that your homie said or whatever, the girl at the grocery store, whatever she said,
Right.
don't take all that stuff to heart. Learn how to do your own research and not or and talk to a couple professionals that are actually in that field and get the facts,
Right.
because we're all regulated by these different departments: Department of Real Estate, Department of Business Oversight. They're a great source. You got a real question, you go ask them. Fannie, Freddie Mae, and them, they know they like to talk about something. It's the government. They got a process and an answer for everything. Okay.
Right. Right.
So don't be distracted. I call it being distracted. I call it they distract us with the bad news and the fears. So like we were distracted with these high interest rates. Oh my gosh, you guys were so distracted. You just didn't do shit. You didn't buy a house. You just didn't do nothing.
Right.
And then guess what? You needed to move and go rent a house. And guess what? The rent went up. because my investor homie,
Right.
went and bought it
Right.
for cash because y'all was sitting back chilling, so not wanting to buy anything because you're waiting for the interest rate to go down.
Bad
Homie
move.
came in like, I don't care about that.
We'll
I'm
take
about
that.
to put some money on this thing, get a loan for the rest of it, and put me a tenant in it so they could pay my mortgage for me since they don't want to pay their own.
Right. Right.
Because like no matter what, we out here paying mortgages, whether you actually own the property you're in or not. We're paying mortgages.
Right.
So
You have to.
that's why again, it's always a good time to buy.
Right. Yep. Get back to the original question. I mean, for me, this is exactly why I named this podcast Gridloc'd. You know, for me, it was about just business minds coming together. But really, Gridlock really came from was 2023. Buyers weren't buying, sellers weren't selling. And it was a lot of fear going on. I mean, everyone had a tough year or a down year, what we're not used to in 2023. But 2024, we're trying to change that with the amount of information that's out there. So maybe it won't be gridlocked as much. It was definitely a trying year for all of us involved in this industry, whether it's real estate or the financial world. I mean, we all, especially in California, experienced a lot of different changes. So that's really it. I mean, I kind of want to tell a couple of horror stories here and there. You have any?
You got a horror story? You tell a horror story. Heck no, I don't got no horror story.
You don't got no horror story?
If it's a horror story, it'll be true.
No, just a horror story. Just kind of, tell people industry wise what some things that come across.
Oh, real estate horror story.
Yeah, some things that come across that, mine are easy. Hey, Derek, I was looking at this home. It's $600,000. Okay, great. Are you pre-approved? I'm in the process of getting pre-approved. All right, cool. Well, me personally, I don't like showing people anything without a pre-approval. Obviously, I need that. And it's for a couple of different reasons. One, I don't want you to fall in love with the home and then just can't afford it. And that's usually the horror story. They'll say, hey, I want to see this house, 600,000. We go look at it, which I don't do, but it's happened in my earlier years of real estate. And come to find out, they're only approved for 450. Great. What are we going to do now? So these are the types of things that, as long as the information is out there, people can understand that there is a real process for this, and we have to go through the process so you understand where we're headed. We're not going to have you fall in love with this home that meets all of your needs, all the criteria, and you just can't afford it. So now anything that you see in the 450 range in this example, you don't love, you don't like. You want that $600,000 home, and it's like, well, we can't do nothing about that. We got to go through the process first, getting yourself approved for the number. And honestly, for me, even if you are approved for 450 or let's just say 600, I'm not going to show you anything at 600. And even if I do, I try to give myself some wiggle room for, bidding wars. It's kind of popular in the Bay Area. I'm not gonna lie. There's a lot of contingencies.
Right,
yeah, contingencies we have to remove and things like that just to get into the home. So if I show you something at 600, we're already at our max. We don't have no wiggle room, and we can get creative in the contract. That's not a problem. But it's just one of those things that I would much rather start your search around the 550 range, and we'll just work our way up. We have a lot more room to wiggle instead of just being right at the cap of 600,000 and we can't go no further. This is our, best and final. It's the first offer. Mm-hmm. That never works. Well, not never. Doesn't work a lot.
It sure doesn't, because I'll tell them, they'll be like, well, I want this one. I'll be like, well, you can still get it. You just got to pay the difference, okay?
Yeah.
They'll be like, oh, okay, never mind. Okay.
Yeah.
Down payment assistance not going to cover that.
Yeah, no, 150,000 is a little much for
it's a little aggressive.
Yeah, a little bit. One question I didn't really ask. Very new program. The
150,000 one.
Yep. You knew
everybody been asking me about it. So as you guys remember, last year, the first phase, I think it was barely open 48 hours and all the funds were gone.
Yep.
Boom. So this phase, I'm like, I don't know who's going to shoot me for this, but I guess I'm going to put it out there in the public. I'm not really pushing it. I'm really not, because I don't believe in, I know how emotional people get when they're in the home buying process. Okay, that's number one.
For real.
I'm a very emotional and sensitive person, so I'm not gonna put people through that because this round is a lottery.
Yeah.
If you have you still go through the process, get pre-qualified. I pre-qualify you. I submit it to the Dream for All people over there at Cal Halfa, and we just hope for the best.
Right.
Hope you get picked. Now, I don't know about y'all. You've been playing Powerball and stuff, but I still didn't get picked. I'm pissed.
Never.
Okay, so I just don't want to put people through that, and those kinds of things discourage people because it's like, why? Like that's 150,000. I don't even have another program to back up with that. If I have you pre-qualified using the 150,000, now you can live in the area that's close to your job and in your community. But if you don't win that lottery, that's going to kill everything for you.
Right.
Everything. And I'm just not interested in being the deliverer of bad news if I can avoid it. I'd rather go with the things I know for sure and for certain is solid. Right. This is what you can do. If you can't do that for whatever reason, here's another option.
Right.
And we only have until the end of this month to get everybody in. People are still trying to get all their 1099s and tax returns situated. And all
I'm telling you, I'm a little behind my taxes.
Right. So I'm just like, it's great for the people who are gonna get it. And then on top of that too, the other thing is too, I guess people were getting in trouble from the last round because one of the requirements is to be a first generation homeowner. So meaning that your whole little parents and grandparents, they shouldn't have been homeowners.
Right.
At all. But guess what? People have homeowners back in their generations. So that's still the same requirement here. And it's just like, then why are we doing a lottery? Like, you know what I'm saying? Like it should just be first come, first serve, and that's that. Right. But it's a lottery.
Of course. Yeah. I mean, that's the tough situation to be in, trying to win a lottery. I mean, that really is what it is, a 150,000 lottery. That's tough. Yeah. Especially...
I've had people actually cry, because remember, I think one of the clients you referred to me, I don't want to try to muster her name up.
No.
But she was that little waitress in Lodi, I think. Yeah, she cried.
Yeah.
But she couldn't qualify. I was like, we're not doing this like this again.
Yeah.
Because I didn't like that don't feel good. You know what I'm saying? And even though I was trying to encourage her, like, no, like that's not it. Like we can still do it. Mm-hmm. We just got to do this or wait this amount of time. But it was just still to where it's like she understood that that could happen. But if it would have been able to happen right then, it would have made her life so much easier in her plans and her goals. Go move forward in the way that she really wanted to have it done. And I really want to be a part of helping people with their dreams and goals,
their
not
success,
deterring them. Yeah.
Yeah. Yeah. No, for me, that was a pretty tough client to deal with. Not tough as they were tough. It was just the outcome was tough. And it was something, she was a person that I really wanted to help and, get her into the home that she wanted. But, it was definitely not our most shining moments,
Right.
And we're gonna run into those here and there.
Yeah, you're not kidding, but I didn't like it.
Yeah,
it hurt.
It definitely hurt me as well too. I mean, forget the financial aspects of it. We really don't care about that. But it was just like that was a really good person. She was going through a lot.
She's working hard, doing her thing. I was proud of her. Like, man, okay, let's get you a house.
Get in there,
You deserve it.
Yeah. So
even her mom had her back too. Her mom was like rooting for, like, man, yeah.
Right.
It was just like,
well, here we are, and that's tough. Just as professionals to, like you said, break the bad news. It's like nobody wants to do that, but you got to land the plane eventually.
Don't run out of gas.
Can't keep circling because it's gonna be way more tough if we run out of gas in midair for sure. To land that plane.
That emergency plan gonna change.
Yeah, no. It was that, and I wouldn't call that a horror story, but it was one of those stories where the outcome wasn't the best. Yeah.
I want to do let me do a pet peeve. Because I feel like education is golden, know, and I feel like I want to teach a client how to be a client and a good one. Right. So, or even a prospect, even how to be a good prospect.
Right.
Whether you fill out an application or not. So here we go. I have an inbound marketing campaign running, right?
Mm-hmm.
That's what's going on now. I have an inbound marketing campaign. Inbound meeting for you guys. Inbound meeting, people are opting in, and I'm asking them, is it okay if I contact you to discuss what you just read?
Right.
They say yes online. They say yes online. I'm saying online. They say yes. They clicking away. Yes. They put their email in. Yes.
Right.
Phone number. Yes. All of that's in there. Boom. I'm like, okay, cool. Allison on the phone with me. Hello? Hey, this is Qiana from Mortgage Tree Lending. Hello?
Right.
Hello? Maybe something happened. Let me send a text.
Try it again.
Hey, I see that you had an inquiry online. I don't know what happened. We just got disconnected. But I wanted to see what day and time you'd be available to get on a quick call so I can answer any questions you may have. I don't want to talk to you. Out. Because there's an option that's unsubscribe. Out.
Right.
Well, why'd you get in here?
Right.
Don't go pushing my buttons because you're pushing my buttons.
Or my favorite with that is, how'd you get this number? You provided it. That's how.
And it's my campaign. It's real time, so it comes in the app and it tells me. So I'm literally calling them like right after they hit the button. So I'm like, now why are you so lost? Or you just don't answer the phone. I'm like, okay, cool, that's fine. So you guys don't be a good prospect. Like if you really want the information, get the information. We work on commission. We don't work on phone calls.
Right.
So we don't want to call you if you don't want to talk. Trust me, we don't want to. Okay.
Right. Yep. No, that's definitely true. I have a lot of people hang up in my face, and it's a numbers game, but a lot of it is you submitted your information to me. I didn't come cold calling you. So, I understand some people doing it just trying to get the information. Everyone's so quick, especially with autofill. Yeah. Everyone's so quick just to, let me see if I can get this information. Okay, cool. Yeah. So this is kind of why I wanted to do this, so I can give you the information without, you ever submitting anything to me. Here's the information. And when you're ready, you contact me. Because I don't want to go through the same process of, oh, how'd you call me? Or how'd you get my number? Who are you? All the information was in front of you. You just decided to click through it just so you can get it. So here's the information. Here's who we are. Here's our Instagram handles and all the information that you need. Here's it right here. We don't have to come looking and tracking you down if you don't want to be talked to. So if you want to be talked to, we're here to answer any questions. And me personally, I know both of us, but me personally, I really take my time to explain contracts and explain the process for people so they're empowered as a client themselves and they understand what's coming next. Because in the very beginning, I always tell my clients, it's just us two in the very beginning, the realtor and your lender. But once we get into contract, you got a whole list of people that you're going to talk to. And I try to let them know when they're coming, how they're coming, and how fast, because it opens up. And that's something I would probably do another episode on, how that process is, how many different people will come into the fold once we're in the contract. Because, I just had a client just recently. They knew who was all coming, when they were coming, but it was still a shock. Like, oh, you told me, but I didn't realize it was that many people. Yeah. It's a lot of people coming in. A lot of people to talk to, a lot of people to, give your information to. Not everyone is comfortable giving all their information unless you know for sure it's coming. And that's really my point. I want you to know who's all coming and when and where. Me, I have a transaction coordinator. So he takes care of all of my everything, paperwork. And he's going to ask for information that I haven't already provided to him from you, but he may go ahead and ask one more time. What's this? What's that? How you do this? So we definitely try to provide as much information as possible up front so people don't just get lost. And you can get lost in the sauce very fast. There's a lot of paperwork. On my end, there's a shit ton of paperwork. On the lending side, there's a shit ton of paperwork. You're going to get tired of signing your name so much. I mean, for me, I have a lot of digital signatures, but there are some that need wet signatures as well, too. But we definitely try to make sure they're well aware and empowered to know who's coming and when and where.
Yeah, the signatures be a little dry in the beginning, but they get real wet at the end.
Yep.
And when I say a little dry, meaning you can sign electronically,
Mm-hmm.
but when it comes down to escrow and you meet with that notary, oh,
Yep.
it's real wet.
When it's
And it's
time to
like it's
transfer.
like a little mini dictionary.
Right.
So don't even trip. It's a little dictionary, but it's your house. It's your
Right.
house paperwork. You're fine.
Yep. It's the last bit, and you be able to sign wet at the end.
Yep. And don't and you guys that the little Bible you're gonna get, um, you'll get a copy of it or can get a electronic copy of it prior to your signing, so you can have time to go over it with your lender with any questions you may have or if you see anything that's wrong or whatever. So don't think that you're just gonna get this big old pile put in your face and everybody staring at you to hurry up and sign without reading it. We
Right.
want you to understand what you're signing. Definitely, this is really important to read and make sure everybody's on the same page.
Not only that, sometimes I'll put a camera in your face. We want to commemorate you signing all this paperwork. You can look back on it and say, that was a lot of shit we did. These
And it
30
was worth
days.
it.
Yeah, these 30
Mhm.
days was something else. Okay, well,
Exactly.
I'm pretty much good. One last thing I want to kind of bring up, and I want you to kind of tell people what's next for you, what kind of things you're working on, and let people know who you are.
So right now, what's up next? I will be working with my fellow real estate agents to overcome or navigate this whole NAR settlement thing.
Oh
Um,
man.
I think here we go again. Everybody got scared. You know what I'm
Right.
saying? So everybody tripping, scrambling around. I've seen 1,000 webinars pop up on this
Of
subject. Like it's
course.
an emergency. Everybody, come on, we got to get it figured out, right?
Yeah.
So I'm like, okay. For me, I'm like, okay, cool. We got bad news, and the only reason I say, okay, cool, we got bad news because every time there's bad news, there's opportunity.
Right.
You know what I'm saying? So I'm looking forward to getting with my agents. I've been sending them. I gotta send it to you too. I got some information last night um, that will help agents and loan officers to navigate this whole thing. And honestly, I'm like, it's kind of funny though because I'm like, I was like, so agents are gonna have to start being nicer to loan officers. Like
Yeah.
because now y'all over here, the buyer's agent, y'all over here with us. You know what I'm
Yeah.
saying? We
Yeah.
gotta figure it out. So listing agents are gonna have to be nicer to loan officers
Well,
because
they are. Yeah.
we're gonna oh yeah, because buyers they're gonna if they're like, oh, I gotta pay the buyer's agent not to
Right.
sell you. Oh, let me just go talk to the lender and then we just get that together and then so now we're gonna be the ones that are referring the client straight to the listing agent so that
Right.
they can save the money. We don't want them to have to pay extra money, or we're creatively putting it
In the contract.
within seller concessions. But if
Right.
you're using it up in seller concessions, then
That
it's not.
Yeah, that to me is what's going to create. And sorry, LA's listing agents. I'm gonna say it. It's going to create more asshole listing agents. Honestly, I just foresee that. Especially in the luxury market. I mean, they've always been like that. But just in the regular residential, I see this, and I could be completely 100% wrong. We'll go back and look at this. A year later, I think the listing agent is going to turn even to more assholes if this actually gets adjudicated and everything like that.
Absolutely.
Yeah.
It pushes the agenda for dual agency.
Right. Exactly.
And but listing agents may not get to be assholes like that because you can't forget about the flat fee brokers that came out prior to this
Mm-hmm.
announcement. Like
Flat
they running
fee
around doing $1,500. Here,
right.
let's go. List your house. It's done.
Discount
So they're
brokerages.
gonna have to compete with that because guaranteed more of those are gonna pop up or they're gonna go on and invest and open up one themselves.
Right. I mean, we've already dealt with the Redfins and all the other discount brokerages before. I just think this is going to open the floodgates for them even more. But
Mm-hmm.
on top of that,
Mm-hmm.
no disrespect to any of the Redfin and other discount brokerage agents, some of them just don't do the job as thorough because they are discount brokerages because they don't feel incentivized to work as hard, as far as some of us who are working for that 2.5 3% commission or more depending on what kind of services you provide.
So what exactly? Yeah, let me ask you a question, D.
Okay.
What exactly are they paying for? What is the benefit of a buyer's agent? Because I know that the buyer's agent specifically looks out for the interest of the buyer, and a dual agent, listing agent, could kind of be biased still to the seller. So I still think there's a need for buyer's agents.
I mean, there's absolutely going to be a need for buyer's agents, and what's the benefit is exactly what you just said. Is protecting the rights of the buyer. If you have a dual agency, I mean, yeah, we can run into some legal issues right here, but I don't care. The listing agents may or may not, care as much for the buyer because they're all like, I just want to get this done. And,
And get the
that's
most
that
commission.
fiduciary that we take. If you're buying a property and the listing agent is also your agent as the buyer, who's to say that, because they know the pre-approval amount, let's just use that 600 that we've been using, if the owner is willing to take 575, but the LA or the dual agent is looking out for their commission, they could be like, oh yeah, we'll just offer 600 to get it done. There's an issue, and that's one of those things that we would hope dual agents don't do that. We know some of them do it without getting caught, but it's one of those things that buyers should be aware of, and they should, you know, basically toe that line and be very careful and just understand that it's possible. And because it's possible, whether it's 1% or 100%, because it's possible, you need to make sure you are fully protected by your agent. And I work on both sides. I've been a listing agent and I've also been a buyer's agent. Definitely don't want to, you know, bridge that gap where we're fighting for the commission instead of the client getting into the home.
Yeah. That's
That
what seems like about to happen.
yeah, and
Because
that's
if the listing agent is calling the shots on the buyer's agent commission, that's kind of funky.
right. And in years past, I was actually discussing this with another agent friend of mine yesterday when we was on that webinar. um, it was one of those things where I was telling him, I was like, well, years past, we would use buyer broker agreements, basically saying, you know, you've hired me to be your agent. You know, if after so much time you decide to go somewhere else and it's the same property, I'm still due a commission. You know, I don't want to go into the actual legal terms of it, but that's basic the terms of it. But we also put a clause in there like I am owed, let's just say 2.5%. If the seller doesn't pay 2.5%, let's say the listing was 2, then the buyer is responsible for the other 0.5%. And that's what we used to use. I mean, I still use them personally. I've been burned on, you know, not having buyer broker agreements with my clients before. So that's just a protection for us. And if we continue to use the buyer broker agreements, nothing should change. I mean, none of us have a crystal ball, so we'll kind of see how it goes. But that's the main point. Like, we'll put that clause in the buyer broker agreement anyways. So if let's say the new terms come out and sellers aren't responsible for the 2.5%, the clause is still there. So if it's 0, then you're responsible for the 2.5%. If it's 2 and there's still splits, you're still responsible for the 0.5. So as long as that clause is in the buyer broker agreement, then we should be fine. And it's forcing the buyer's agents to actually use buyer broker agreements, which is something I've been using since 2016, you know, for, you know, pretty good amount of time. We're almost talking about 8 years now that we've been using the buyer broker agreements. So we'll see how, if the judge actually, you know, puts it into law in July, how things will change. I don't foresee too much for people who've been using the buyer broker agreements. But we'll see. We'll see how the market adjusts and how the consumers adjust to it as well too, especially on the lending side. And the concessions, there's only going to be so many that we can use.
They're not going to change.
Right. I'm
Yeah,
just
they're
talking
not
about,
going to. It's like it. Well, the seller concessions are unchanged, where it's like you can still get up to 6% on
right,
FHA. Conventional might be a little different,
right.
but you can still get your 6%. But it seems like there's a lot of emphasis on that buyer's agent agreement, that they're
Mm-hmm.
wanting those to be in place, because what I have not read is they're saying that, oh, like the average of industry standard has been, 6% to be split between the seller side and the buyer side. So they still haven't even specified what that even looks like.
Right.
They're just saying use your broker agreement, and the buyer is responsible for paying you.
Right. Like I said, as long as that clause is in there and the agent actually explained to the buyer what that means, and if the lender's involved as well too, they'll be able to explain that as well too. But as long as those things are in place, it shouldn't be an issue. But again, we're at the end of March, well, middle March. We'll see how things will change come July 1st if people are actually, if it gets put into law and people are actually, starting to use those agreements. Like I said, I've already used them for the last 8 years. So the agents and the lenders who aren't used to using them and seeing them, it may be a little different for them. But someone who's already been using it, it should be status quo. But again, we'll see. We'll see how things kind of move along.
Yeah. Yeah.
Definitely gonna be interesting though.
Yeah, it is, because I'm just like, well, because in essence, from like the lender side, it doesn't really seem to make a difference because the buyer is getting it fine, the purchase financed anyway.
Right.
You know what I'm saying? So, if anything, I would think any cure to that would just be a slight adjustment to the offer price or whatever, that
Exactly.
extra 1.5 or 2%, just to make sure that the buyer's agent is covered.
Right.
So
Yeah.
seems more scarier than it really is. I just think it's gonna have to be structured a little differently.
Yeah. And as time goes on, we'll know more information. I mean, this just recently came out. It hasn't even been put into law yet. So, as you know, especially in LA, especially California in general, we kind of beat to our own drum. So we will adjust how business is done. But I don't really foresee it changing too much, except for, like I said, the people who haven't been using them, then it's going to drastically change their business. But the people who have been using them, it should be the same. It should be exactly what we've been doing for X amount of years, however long they've been in business. Um, I don't. Like I said, I just don't see too much change for my business. We'll definitely
Good.
see, because you know I could say something today in March. By April 1st, it'd be completely wrong. That's the nature of this business. So, depending on.
Oh, I have a fun tidbit for April 1st, actually.
Yeah,
And I have to say it before April 1st so y'all don't think I'm playing.
let's hear it.
But this is for landlord tenants. So a lot of these landlords, they've been trying to move their tenants out, sell out, do all kinds of stuff
Yep.
because of whatever, right? So one of the reasons that landlords have been using of why they want their tenant to move out is for a family member or for themselves
Right.
to move back in. That's the only way for them to be able to legally do it without cost, and for them to be able to avoid having to pay the local jurisdiction's taxes for having a rental property, right?
Right.
So, starting April 1st, they're not going to be allowed to use that as a reason for that purpose. Like, so that's going to help protect a lot of people to where they're, to keep them in a home. Right. Because it's like, okay, you still need to give like the property, like you literally signed up for this to be a rental property. And now here you come talking about, oh, I need my family to come up in here or me.
Right.
Like, you know what I'm saying? So I kind of like that one because I think it helps to keep landlords kind of like not in their place, but in their place to where it's like, if you're doing investment properties and this is for the renting community, that's what it is. Keep it that way.
Keep it there, yeah.
You know what I'm saying? Especially if there's a family in there.
Right.
Like, what are you doing? So I just wanted to share that because I know a lot of people are going through housing issues and, they get scared because landlords are threatening people and saying and acting like they're making deals with them. Like, okay, well, if you move out in 30 days, then you can avoid going to court and having an eviction on your record, and then you won't be able to move nowhere. And it's like, okay, Mr. Landlord, and everybody who's trying to scare people with these tactics. Uh, for certain out here in Southern California, LA County specifically, it's taking 6 to 12 months to get to court about anything,
Yeah, I'm telling
especially in eviction.
you.
So you guys don't worry, and as long as you respond, and as long as you show up to that court date, whether you've still been there or you moved or whatever, but if you show up and you talk to that judge, you say, hey, I'm already moving, I'm doing this or whatever, you can still get it dismissed. Just always respond and be active, because you don't want that on your record, or messing with your credit, especially if you use your rental payments as a credit line.
Right.
You don't, you just always respond, always go to the court and go talk to the judge. You'll be surprised. Judges are hella cool. They be ready to help. Right. Because they still the landlords too.
we not used to hearing judges are cool.
No, I was like, in that courtroom, in that jurisdiction, right. Housing and civil. Oh yeah, it's a little easier road over there.
Right.
Because it's like they could, they have to be able to do their decisions unbiased. And if you're being a responsible citizen or tenant, you're like, hey, I just had a bad year. Right. Just like a whole bunch of other people. Right. Maybe 2 years it was really terrible. And especially like if you guys are getting like the rent assistance programs, and like you've been waiting for that money or whatever, tell the judge that they're not going to put an eviction on your record, you guys. So keep doing what you have to do to get you into home ownership, and maybe you'll be over there at the court with a judge and your tenant one day.
Right. That's definitely the goal. All right. Anything else you want to cover real quick before we sign off here?
No, I feel like this could go all the way over. I'm like, it's about to be dinner time. I need to still have lunch.
I know, right? Okay, well, I mean, that's it for me. Again, like, comment, subscribe, share this, give it to someone who definitely could use this information. It's a lot of gems that was dropped during this interview. I definitely want to thank Qiana for coming on and talking to us through the lending process. This was definitely helpful. I know for me hearing it, but all the buyers and potential buyers or sellers out there that need this information, it was definitely great to hear. So thank you for that, for sure.
You're welcome. Thank you for doing this, D.
All right, you guys, signing off.
All right.